XRP is set to eat Wall Street alive. Let that sink in for a moment. We're not just talking about another crypto pump or another cycle of hype. We're talking about a seismic financial shift that could fundamentally change how money, assets, and investments move around the world. Think about it. Every single stock you know today, every bond, every treasury, every slice of real estate, even fine art, could soon be living on public blockchains. And the XRP ledger is positioning itself right at the heart of this transformation. For decades, Wall Street has been the ultimate gatekeeper of wealth. They've controlled the markets, they've controlled the access, and they've controlled the profits. But now, for the first time in history, the walls are crumbling. Tokenization and stablecoins are prying open the doors to an entirely new financial system, and XRP is the wrecking ball smashing those walls down. Here's why this matters to you. If you've ever felt locked out of Wall Street's exclusive club, this shift could give you direct access. If you've ever wondered whether crypto would actually be adopted by the big players, this is your proof. And if you've ever asked yourself which crypto could truly lead the way in global finance, XRP is right in the spotlight. This isn't speculation anymore. We're seeing it unfold right now. Billion-dollar institutions, global banks, and massive fintech firms are already moving to tokenize assets on-chain. And the XRP ledger, backed by Ripple, isn't just participating, it's leading. So in this video, we're diving deep into why Wall Street itself is desperate to tokenize, how Ripple and the XRP ledger are already powering trillion-dollar opportunities, and why this could be the moment XRP cements its place as the backbone of global finance. You're not going to want to miss a single second of this breakdown, because once you understand what's happening, you'll realize we are standing at the very edge of a financial revolution, one that could change the value of XRP forever. So grab a seat, hit that like button, subscribe if you haven't already, and turn on notifications, because what I'm about to show you isn't just news. It's the blueprint for how XRP could eat Wall Street alive. In crypto, hype comes and goes like the tide. One day it's meme coins, the next it's the flavor of the month DeFi project. But if you've been in this space long enough, you know the truth. The only projects that survive the storms are the ones with real-world utility. Utility is the dividing line between speculation and transformation. Utility is what separates a coin that trends on Twitter for a week from a network that reshapes the global economy for decades. And when we talk about utility in crypto today, two massive use cases stand above everything else: stablecoins, tokenization. Now, let's unpack this, because these aren't just buzzwords. These are the backbone of the future financial system. Stablecoins, the bridge to mass adoption. Stablecoins are the on-ramp. They are the bridge between traditional finance and the world of blockchain. Why? Because they represent the one thing everyone already understands and trusts: the value of money itself. Think about it. Stablecoins peg themselves to dollars, euros, or other fiat currencies. That means they combine the speed and efficiency of blockchain with the familiarity and stability of traditional currencies. Businesses can use them without worrying about wild volatility. Banks can use them without tearing up their balance sheets. Everyday people can use them without feeling like they're gambling. And here's the key: stablecoins unlock liquidity. When a stablecoin is settled on-chain, it opens the floodgates for billions, even trillions of dollars, to move instantly across borders, without middlemen, without friction, and without delay. This is why governments, Wall Street firms, and fintech giants are obsessed with stablecoins. It's not just about payments. It's about unlocking a whole new digital economy. And once you have that foundation, the next phase becomes inevitable: tokenization, the financial revolution. Tokenization takes the power of blockchain and applies it to everything else: stocks, bonds, real estate, commodities, treasuries, you name it. Instead of being trapped in slow, paper-based systems, these assets become digital tokens that can be traded, tracked, and transferred in real time. Think about the implications. You could own a fraction of a Tesla share or a piece of New York real estate instantly, from anywhere in the world. You could move tokenized bonds across borders in seconds, instead of waiting days for settlement. You could unlock trillions of dollars in illiquid assets by putting them on-chain, where they can finally move freely. This is the holy grail for Wall Street. Tokenization means more liquidity, more access, and more efficiency than the financial world has ever seen. XRP at the center of it all. Now, here's why this matters for XRP. The XRP ledger is one of the few networks already built to handle this vision. It's fast, it's efficient, it's cost-effective, and it's already being used for both stablecoins and tokenization. While other blockchains talk about scalability and dream of adoption, XRP is quietly building the infrastructure to power real financial systems. From banks to governments to fintech firms, the demand is already there, and XRP is delivering the rails. So when we talk about why XRP sits at the center of the future of finance, it comes down to this. Stablecoins provide the entry point. Tokenization creates the trillion-dollar ecosystem, and XRP ledger ties it all together. That's not hype. That's not speculation. That's utility, and in crypto, utility is the only thing that truly matters. Why XRP, HBAR, XLM, and SUI are targets. When you look at the crypto market, not every project makes headlines during times of uncertainty. Meme coins rise and fall. Pump and dump tokens vanish as quickly as they appear. But certain names, XRP, HBAR, XLM, and SUI, keep surfacing again and again. Why? Because these projects are not simply coins. They are infrastructure, the foundation for how value will move in a digitized financial system. Let's break this down. XRP, the cross-border giant. At the center is XRP, Ripple's digital asset. Think about it. Trillions of dollars move across borders every year. Banks currently rely on slow, outdated systems like SWIFT, which can take days to settle transactions and charge heavy fees along the way. Ripple created a faster, cheaper, and more efficient solution with XRP at the heart of it. Settlement times in 3 to 5 seconds. Transaction costs less than a penny. Scalability to handle thousands of transactions per second. If you were a bank, a remittance company, or even a central bank looking to build a payment rail for your digital currency, why wouldn't you explore XRP? That's exactly why it has been in regulatory crosshairs for years, because it threatens the status quo. HBAR, the enterprise backbone. Next, we have Hedera Hashgraph, HBAR. Unlike many blockchains that fight over retail traders, Hedera went straight to the top. Enterprises and institutions. Its unique technology isn't even technically a blockchain. It's a hashgraph consensus system, which offers unmatched speed, fairness, and security. And here's what makes HBAR dangerous to the old guard. It's governed by global giants like Google, IBM, Boeing, LG, and Standard Bank. It's designed for enterprise-grade use cases like supply chain tracking, identity verification, healthcare data, and financial settlement. It's built to handle tokenization at scale. Stocks, bonds, and real-world assets can be issued and traded seamlessly. When corporations want to step into the tokenized economy, do you think they'll choose a random meme coin? No. They'll look at platforms like Hedera, XLM, the currency of inclusion. Now, let's talk about Stellar Lumens, XLM. While Ripple focuses on the institutional side of cross-border payments, Stellar takes a different path. It's building financial inclusion for the unbanked. There are over 1.4 billion people worldwide without access to banking services, but many of them have mobile phones. Stellar wants to bridge that gap. With Stellar, users can send money across borders in seconds. Small businesses in developing nations can access financial services without needing a traditional bank. NGOs and humanitarian programs can distribute aid instantly and transparently. This is not just about profit. It's about creating a parallel system of global money movement that bypasses the inefficiencies of the legacy system. SUI, the new age of scalability. Finally, there's SUI, one of the newer but most innovative projects. Built by former Meta engineers, SUI solves one of the most pressing problems in crypto: scalability. Most blockchains choke when millions of users try to transact at once. High gas fees, slow speeds, and network congestion become the norm. But SUI is designed with parallel execution. meaning transactions can run side by side instead of waiting in line. This allows high throughput without sacrificing decentralization, near zero fees, making it practical for everyday use. The infrastructure to power the next generation of decentralized applications and tokenized assets. SUI isn't just about payments. It's about building the rails for a Web3 economy where financial services, gaming, social platforms, and asset markets converge. Why their targets? So why do XRP, HBAR, XLM, and SUI get so much attention from regulators, governments, and financial institutions? Because they are real threats. Unlike speculative meme coins, they actually offer solutions that could replace outdated banking infrastructure. And let's be real, Wall Street and governments don't like competition. XRP threatens cross-border payment monopolies. HBAR threatens enterprise service providers. XLM threatens legacy remittance firms and banks. SUI threatens old, inefficient blockchain networks. In other words, they're not just tokens. They are the building blocks of the next financial era. That's why they're targets. That's why the spotlight is on them. And that's why, when the dust settles, these projects could stand tall while others fade away. The ripple effect on Wall Street. Now, here's where things get really interesting. We've talked about utility and why it matters. We've talked about how XRP, stablecoins, and tokenization are the backbone of the new financial era. But what does all of this mean for the giants of Wall Street? It means disruption. Not the slow, decades-long kind that they can gradually adapt to. I'm talking about a seismic shift, one that catches them off guard, forces them to adapt, or gets them left behind completely. Think about it. The entire business model of Wall Street rests on being the middleman. They control the plumbing of finance, the clearinghouses, the settlement networks, the custodianship of assets. You want to move money internationally? You go through banks. You want to trade stocks? You pay fees and wait days for settlement. You want to buy bonds, real estate, or commodities? You rely on their infrastructure. But what happens when that middleman is replaced by instant settlement on blockchain rails? What happens when XRP can move trillions in value with no delays, no intermediaries, and a fraction of the cost? Suddenly, Wall Street's moat starts to crumble. And here's the kicker. This isn't theoretical anymore. Ripple is already working with central banks to launch CBDCs. They're already involved with banks and payment providers worldwide. They're already testing tokenization pilots for everything from treasuries to real estate. When Wall Street sees this happening, they have two choices. Fight it, try to slow down adoption with regulation, lawsuits, and lobbying. Join it, integrate Ripple's technology into their own systems. Because the alternative is obsolescence. But history tells us something important. Disruption always wins. Look at what Netflix did to Blockbuster. Look at what the internet did to newspapers. Look at what Uber did to taxis. The incumbents always underestimate the speed of change, until it's too late. Now, imagine this scenario. Stocks trading 24/7, settled instantly on blockchain. Bonds and treasuries moving across borders in seconds. Real estate, commodities, and private equity tokenized and traded without Wall Street gatekeepers. And all of it happening on XRP's rails. That's not just a minor efficiency upgrade, that's Wall Street's worst nightmare. Because here's the truth. Wall Street makes billions off of inefficiency. The longer your money takes to settle, the more fees they can extract. The more complex the system, the more middlemen get paid. But Ripple flips that model upside down. It says, what if the system was designed to be fast, transparent, and cost-effective for everyone? Not just the elites. This is why the phrase XRP will eat Wall Street alive isn't just hype. It's a reflection of the fundamental shift we're witnessing. A new financial order where utility beats legacy, speed beats bureaucracy, and transparency beats manipulation. And the best part? The tide has already started turning. Banks are no longer laughing at crypto. They're adopting it. Regulators are no longer ignoring it. They're building frameworks around it. And while Wall Street is still trying to figure out how to profit from the shift, Ripple and XRP are already years ahead in execution. So, the question isn't if XRP will disrupt Wall Street. The question is, How long before the floodgates open and Wall Street is forced to play by Ripple's rules? Now let's connect the dots. If XRP is powering stablecoins and tokenization, what does that mean for Wall Street? Think of it this way. For decades, Wall Street has been the gatekeeper. If you wanted to trade stocks, bonds, or real estate, you had to go through banks, brokers, and middlemen. That's why Wall Street is so powerful. They control the pipes that money flows through. But here's the twist. XRP is building new pipes. Instead of waiting days for a cross-border wire to clear, payments can move in seconds. Instead of holding billions of dollars in outdated settlement systems, institutions can move value instantly and at low cost. Instead of being stuck with trading hours, tokenized assets on-chain could trade 24/7, globally, with no friction. This is where it gets interesting. Wall Street doesn't disappear overnight, but it loses its monopoly. The control it once had over money flow starts slipping away, because suddenly you don't need the old infrastructure when a faster, cheaper, and more transparent one exists. And here's the kicker. The more institutions adopt XRP for real-world use, the more valuable it becomes. It's not about hype or headlines. It's about becoming the backbone of global liquidity. Imagine a world where a bank in London settles instantly with a bank in Singapore using XRP. A real estate deal in New York is tokenized and sold to investors worldwide in seconds. A pension fund in Canada moves millions across borders without touching the slow, expensive SWIFT system. That's not science fiction. It's the natural outcome of combining XRP plus tokenization plus stablecoins. Wall Street knows this. That's why you see headlines, lawsuits, and resistance. Because disruption doesn't ask permission, it happens when something better comes along. And XRP? It's not asking, it's building. So, here's the big picture. XRP isn't just a token. It's infrastructure. It's the rails for the next financial era. An era powered by stable coins, tokenized assets, and lightning-fast payments. Wall Street can't keep up. They can't fight this forever. And every headline, every new adoption, every quiet partnership behind the scenes proves one thing. The future is tilting toward XRP. And this is just the beginning. Because the deeper you look, the clearer it becomes. What's coming isn't just a shift in technology. It's a shift in power. Now, if you want to stay ahead of the curve and not just react to the news but truly understand where the money is moving, then you're in the right place. Make sure you subscribe, turn on notifications, and come back for the next update. Because while others are just waking up to this revolution, you'll already be steps ahead, armed with the insights that matter. This isn't financial advice. It's a front row seat to the biggest financial shift of our lifetime. Stay tuned.